Hello there, this is James and you're watching Tixee Live. In fact, you're watching Tixee Live, watch along of the US Non-Farm Payroll. Now, before we get started and go into the non-farm payroll and look at potential scenarios and have an open discussion, don't forget, these little videos are for educational purposes only and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, know the risks at hand before entering any trade. With that out of the way, let's get started. So indeed, happy Job Friday, everybody. Happy Job Day Friday. Ohio. Hello, everybody. Hi, Cyril. Hi, Cypress X. Hi, SMF 790. And hi, IT 1987T. Good to see you. I hope everybody's well and having a good day. So yeah, happy Job Friday. Now, because obviously today is the big US job data, which is of course US non-farm payroll, due in about 8 minutes time. Now, for those of you who are new to trading, let me just give you a little brief description of what the non-farm payroll is and why it can be so important. Now, it's considered by some Forex traders as the most important economic indicator. I will talk about that in a second. The NFP is released by the US Bureau of Labor Statistics, and it presents the number of new jobs created in the previous month. Plus, the market looks at it to see the overall performance of the US economy. Now, happy NFP Day. Happy NFP Day to you too. Hope everybody's great. Really good to see you. Now, going back to this comment, some Forex traders consider it the most important economic indicator. Is it important? In my opinion, yes, it is. Is it the most important or causes the most volatility? Not always. Okay. Back in the day when I was initially trading, the NFP was the big event. It's lost some of its shine since then. However, it's still a very important event to follow. And I often think, to be honest, the market focuses on one story at a time. So whatever the story is, that economic indicator becomes more important. Like, for example, CPI, for example, and interest rates, even interest rates, but CPI, for example, inflation. But yes, it's still an incredibly important indicator to follow and be aware of. And like I say, it is a good indicator of overall performance of the economy. However, I think really what the market's going to be watching the NFP for about today is to see if finally, the Fed's tightening cycle is finally having an effect on the labor market. Because don't forget, they've been incredibly aggressive with interest rates. They've done 475 basic point rate hikes back to back, for example, and the labor market is still pretty steady. So we will be watching this very closely to see if at last the Fed's tightening cycle is having an impact. And then, like I say, the Fed will look at it. If they are seeing some sort of impact at last, then maybe this might underline the fact that they are comfortable to go for 50 basic points this month in an interest rate hike. So if they can finally see they're having an impact, then this might give them the courage to go, yes, do you know what? We can do 50 instead of 75. If not, if it comes in, say, a lot better than anticipated, a lot higher than anticipated, they may then look at it and say, no, we're not having an impact. We've got to do more. And then another 75 might be on the table. Don't forget, 77% of the market is pricing in over 50, but that's still the meaning of that is still 75. So it's not totally off the table. Now, the expectation for the NFP is to come in at 200,000 The previous reading was 261. But here's the thing, surprises, because the Wall Street has been getting this wrong quite a fair bit over the last 12 months. In fact, the NFP has been on a bit of a winning streak against the people who are predicting these numbers. Let me just go through review. In October, the previous one, the expectation was 200,000. The actual number was 261. September, 250 expectation. Actual number, 315. August, 300,000. Actual number, 292. So slightly under, but close to being expected. July, 250 expectation. Number, 537. June, 268. Actual number, 293. May, 325. Actual number, 386. April, 391. Actual number 368, so slightly under. And then March, what was it? It was 490. Expectation was 398. Feb, 400,000 was the expectation. Number was 714,000. Jan, 150,000. Actual number 504,000. As you can see, on the majority of the year, the NFP has beaten expectation. So it's been higher. In fact, if you want to get to 200,000 or lower than that, you would have to go all the way back to November 2020 when the number came in negative 115,000. So all the way back to November 2020 to get close to the number they're hoping to get today. But even then, in November, the following month, it went back up to 520. So if you really want to go back to 200,000, you'd have to go all the way back to December 2019. And if you want lower than that, you actually have to go all the way back to October 2019 when it was negative 93. So, there's the thing. I mean, last time, okay, like I said, last time it was 200,000 they expected. It came at 261. But don't forget, the market then looked under the hood. Remember, I did a little bit about this. Where they always see the jobs last month, there was like 32,000 in manufacturing, 200,000 in service industry, 600 in food and beverages, a negative 8,700 in real estate. So again, and we are seeing a bit of an impact on manufacturing at the moment, don't forget. I say manufacturing PMI came in at 48.4, which is under 50, which is not good. So anyway, other things coming in, of course, we have unemployment. Of course, expectation is 3.7. Previous number is 3.7 as well. Hello there. Hi. I hope you're well. I hope you're having a great day. Good to see you. So expectation is 3.7. But something else what the Fed's going to be looking at, because again, this is key as well. They need to get this down. Average earnings. Average earnings expectation is 4.6. Previous reading was 4.7. So they're going to be looking at this, see if they finally make that's year on year. Month on month is 0.3. Previous 0.4. But that's going to be looking because they need to start bringing money down, bringing the salaries down and bring the jobs down so they can get on top of inflation. So they need to start seeing an impact. So anyway, let's go through some potential scenarios because we have got 1 minute left to go before we get started. NFP, this is potential scenarios, of course. NFP announced as expected, US dollar gets a short-term bounce as the labor market. 200,000 is still pretty, it's not drastic. Scenario number 2, announced lower than expected, but still above 100,000. US dollar gets a short-term bounce, but then comes under pressure again. Scenario number 3, NFP announced a lot lower than expected, under 100,000. The dollar comes under pressure as the market feels a pivot is on the way. For me, we need a real drastic number under, close or under 100,000. Scenario number 4, which, like I say, NFP has had a habit of doing this to us, and that's higher than expected, and its US dollar gets support. So anyway, we're getting close. So of course, I'm here watching gold. Hands up who knew that anyway. Obviously, dollar yen, of course, euro dollar, and S&P 500. Right, here we go. Any minute now, any second now. Let's go, straight down, all right. Okay. 1,000, straight drop downwards. What is it? Come on. All right, bear with me, ladies and gents. Okay. 221. So higher than expected again. Higher. It was expected at 200,000, came in at 221. Average earnings year on year, 5.1. So higher than anticipated. Unemployment rate, 3.7 as expected. So it comes in higher than expected, not massively higher than anticipated, not massively higher than anticipated, but still higher than anticipated. Good question. What are we thinking now? Agony is killing me. I know. Sorry. Well, look, we need to look under the hood. Because 221, okay, is still a decline. It's still less than the previous month. It's still it's the lowest it has been actually. So 221 means it is coming down. Hi everybody. Hi John. It is coming down. So I'm still probably anticipating they probably still will do 50. But that's a really, really good question. But anyway, let's have a look. So obviously gold, straight my beloved yellow metal, is under pressure. Euro, straight down. We're trading around that 1.05 handle. Now we're under that again. This is on a short term, just under that. Let's have a look. The sterling's bound to have done the same. Yeah, sterling's under pressure as well. We were 122.46 before. We're now at 121.78. S&P 500. Let's see how they've reacted. Okay, the market's got spooked. They think this could be enough now to maybe justify 75. I don't think they will, but this is what the market's looking at. Look at that. 221. So really, it's not like massively higher though. Not massively higher. I mean, again, it's still showing a decline, but again, it's taking its time to come down. And that average earnings, that is a month for month is 0.6 on average earnings. So don't forget they expected 0.3. So it's actually gone up from last month average earnings. Last month was 0.5, so it's gone up higher than that. And year on year, like I said, it's gone up higher than last month was reversed down to 49. So it's higher than last month. So 221, better than expected, not groundbreaking, not like wow, and that's an unexpected number, but it is certainly giving the dollar reprieve now. It really, really is. It's giving the dollar a bit of support. I said it's been surprising. It has not. It's only once this year as the NFP came in lower than anticipated, and that was I'm trying to find all my dates now. August, where the expectation was 300,000 and it came in at 292. That's the only time this year. So in general, it's been surprising everybody. The Wall Street's just getting it wrong. Now it's going to be interesting. It'd be interesting to see. This obviously is a knee-jerk reaction, but will we have the similar sort of impact like we did last month, where initially we saw obviously dollar strength, and then the market looked under the hood and saw what made up the NFP, what made up the new jobs? When are we going to get something similar to that? Because it'd be interesting to see the breakdown of manufacturing roles and how much NFP is made up by the manufacturing. That would be interesting to see. So especially obviously with the ISM manufacturing PMI, coming lower than anticipated. But anyway, S&P just above the 4,000 mark now, 4,000 point level. It's challenging that 200-day moving average again. We're back challenging that level again. So that's interesting. Look at the euro as well. Everything is sort of aiming towards the $200 average again. So key then for me on the $200 average, 1.0388 on the euro. Potential area of interest. Sterling also heading towards at the moment the $200 moving average 1.21092. When there is an announcement like this, how long does it tend to affect the markets for? Days or sometimes longer? It really depends on how the market digests it. The problem with the NFP, what you tend to get, you get the initial breakout or the initial move on the market where the market quickly reacts. And then, like I say, they tend to maybe look at the hood or look at it a little bit more. and then it tends to potentially say, actually, it's a good number, but it's not that good, or there's some other factors behind it, and it then tends to revert. Like, for example, they could look at it and go, right, 221's higher, but that's still a decline. It's still on its way down. So they could look at it like that. But then sometimes it can go on for days if the mood catches it. The NFP tends to be like a knee-jerk reaction. What tends to have slightly longer effects at the moment is the CPI results. Like I said, we've seen that go on for a while, the bullish attitude to the market when that came in a lot lower last time. And obviously press conference when certain statements at the moment, because the market is focused on two things, inflation mainly and interest rates, and whether those interest rates will push the US economy into recession. So when Powell speaks and the CPI reading, that's the thing they tend to pay a lot of attention, and that can last for several trading sessions. But again, anything can happen. Something else can break as well. But that's a really good question. Yeah, so let's have a look. Sterling, then S&P, like I said, we've already said we've looked is coming towards that 200-day moving average again. Gold. Okay, yeah, and that's got a fair bit to go before. Again, he said he couldn't break that $1,803. It's been trying for a while, so he couldn't break through that. But yeah, $200 there. Okay, Nasdaq. Yeah, Nasdaq as well. Dollar yen. That's what I wanted to look at. Ooh, see, because this morning, don't forget we were talking about this. We said that the dollar yen was testing that 200-day moving average. We're just dipping underneath it, but obviously this is giving it a bit of a boost. So as it stands at the moment, we're seeing a bit of dollar strength, a bit of a bounce. Because like I say, again, break it. It is more than expected. It's not massively more than expected though, but I think it's the average earnings that is more. That might have more of an impact. It's the average earnings, because that's just no signs of that. 0.6 month on month. A lot higher than anticipated, and year on year 5.1 average earnings. That's going to be the thing. But anyway, there we go. So a bit of excitement in the market, a bit of a move. I mean, it's not as dramatic as, let's say, the CPI was a couple of weeks ago, sorry. But still a key market mover on that. Look at that. Very nice on the 30-minute chart. Don't forget, you can ask me questions anytime at all, or share me your opinions. I mean, what do you think? Again, like I say, it keeps catching us out. But I will say, let me look at the overall picture, though. It is coming down. It's just not coming down quick enough. It's like inflation. It's just not coming down quick enough. We're seeing it coming down, but it's not coming down quick enough. But again, like I say, answer Mr. Arnold's question, which was a really, really good question, which was, what do you expect the Fed to do next interest rate decision? I still think they're going to go for 50. I don't think this is enough to change it, even though the market's thinking that at the moment. I don't think it's enough to change their opinion on that. I think they will do 50 because those other things, like I say, it's coming down, just not as fast as we want, obviously. Okay, don't forget. I mean, what does everybody else think? Hands up who thinks they're going to do 50 in a couple of weeks' time. Or are you surprised by that NFP number? How many people was going in for lower than expected? I mean, like I said, for me, it would have to come under 100 for the market to really, I think so, 52. 75. Okay. 75. Okay, fair enough. John thinks 50. I think you're right, John. They're lower in the new year. Me. Lower in the year. I don't think so. If they do a pivot, and this is what the market's hoping for, they do a pivot, it won't be at least to the end of 2023. And that's when they will reduce it. But I guess even then, I think they might hold it till 2024, to be honest. The way they're talking, the way they're saying, I think they're going to hold it to 2024. I think. So I'm not convinced on the pivot. But the market keeps convincing itself it's going to happen. But anywho. But okie doke, if there is no more questions, anyway, big shout out to SMF. Oh, I mean, they go to 50. You go, so you do, so you think, what, 75 in December and 50 in January? Possibly. Yeah, maybe. I think the market's sort of looking maybe 50 in December, maybe 25 in Jan. But again, nobody's a mind reader. We're not all Jedi Knights, so we can't always see that. But anywho, that's a good, valid point. Like I say, you could be right. Nobody knows absolutely for certain. Anywho, if there is no more questions or anything else, big shout out to SMF 790, IT 9897T, John Arnold, Cypress X, the Illuminator, Rule R, and Cyril. Thank you so much for coming along and saying hello and interacting and asking questions. And a big shout out to all of you, obviously, for coming along to watch this live event. Like I say, it was a good one. It wasn't, it wasn't the CPI of 2 weeks ago, but it's still pretty good. Still pretty exciting. I still raised my voice and got overexcited as I always do. But anyway, don't forget, a good episode. See you next time. Thank you, buddy. I look forward to it. See you soon. Don't forget, if you do think of a question later, you can put it in the comment section, either on YouTube or Facebook. I will see them and I will reply to them next time I go live on air, which I will be going on air again in about just over an hour's time. And that's just going to be basically do a bit of review of this. I'm going to look under the hood again. I'm going to see what makes up this NFP, what the sectors are. Have a little look. Plus talk about the week and talk about the exciting week ahead of us. So don't forget, I'll be back on again round about 3 p.m. UTC. Anywho, thanks, James. Love watching your watch-alongs. Nice one. Excellent. No, thank you. Yeah, like I said, I like the watch-alongs as well. I think they're always pretty exciting. Anywho, as I always say, if you're watching me on Facebook and you enjoyed this little video, by all means, give us a follow. If you're watching me on YouTube and you enjoyed this little video, subscribe if you like. Hit the notification button so you know next time when I'm going live. If you enjoyed this video, found it interesting and useful, and you've put up with me, by all means, give me one of those. It's nice to know that you like what I do. Anyway, excellence. Oh, thank you very so much. Thank you, Mr. Singh. I hope you're well. Thank you for coming. Anyway, till next time, don't forget, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence. And of course, there are the risks at hand before entering any trade. Till next time, every single one of you, trade safe.